Um, okay, so the way this spreadsheet worked in the past is we had long, low liquidity, long, high liquidity, short, and total. I've gotten rid of the long, low liquidity and long, high liquidity. I just now show one. The most important change is that I have added a filter, two filters, one called market trend and one called override. So you're probably wondering, what do those mean? Let me explain. So market trend is whether the current 13-minute candle closed above the moving average on the S&P 500 chart. So we have I think it's a 40-period moving average. Yep. So I just use this 40-period moving average. So for example, on August 2nd, it would be in a downward trend until 1140. And then at 1140, it would be in an upward trend because that's when it crossed over the moving average, right? It would have been uptrend on August 1st until 1140, at which point it turned into a downward trend. And if we go look at the spreadsheet on August 1st, go to the long screen here, go to August 1st. A lot of data here. Let me try to make this a little faster. So here's August 1st. You can see downward trend at 2:30 in the afternoon, but it was upward trend until 11:36, 11:38, and then 11:42 it crossed over to a downward trend. If we go back to the chart, you can see that up until 11:40 we were upward trend, and then it crossed over to a downward trend on 11:40. I wait for the candle to close, and it's got to be a noticeable close for the trend line. I don't change the trend for just a little minor close unless it opens below it, which is what it did today. So today we would be downward trend until 1140, and then we had a crossover, and then it was in an upward trend for 10 minutes, then it went downward trend, and then it went upward trend again. All right. So that's step one, upward or downward trend. And that determines whether we are buying or selling on the opening 13-minute time frame. However, we have something called override. Override will override the message of the trend with a special situation where we would do the opposite. So let's find an override in here. So on August 2nd, at the open, we had a downward trend. However, we have a long override. The reason that that would happen is because the market gapped down significantly. So if we go back to the 13-minute chart on, what was the date? August 2nd, we had a significant gap down into support. So we actually want to be a buyer on the open. And if you recall that particular day, my comments were be a buyer on the open because we were gapping down into support. So in that situation, instead of shorting the open, we would actually be a buyer. And then you have your P&L over here, and that gets summarized on this screen. So we can go to August 2nd, go to the long side, and you can see that there was an 18.2 RR profit on 54 trades for an average profit per trade of 0.33 RR. If we just look at August 6th, which was a good day, go back to August 6th. August 6th, upward trend, no gap, so we don't override. We just say long and only on the open. We're only counting in this spreadsheet. I'm basically using the idea that we're not looking at the chart. This is just blind, either buying or shorting, no looking at the chart. Okay, so August 6th was a buy day. On the open, we had 11 trades for a 16 RR, average profit per trade of 1.47 RR per trade. All right. Now let's just go through one other special situation like here. In the middle of the day, so we were long on the open. Actually, we gapped up there. So I don't know that was probably a short override on the open also. Let's go take a look. So short on, what day was that? August 1st. So go down to August 1st. Oops, too fast. So see, there was a short here. So this was not a significant gap up. So it was long on the open, and then at 11:40, we have a short override, which means for 1 hour, we are going to look for shorting opportunities because we broke the trend. Go over here. 11:44 is our first candle after 11:40. And for 1 hour until 12:40, we took shorts. There they are. There were 32 of them. Not all were valid trades, however. And I can then go to my spreadsheet and look at August 1st, the shorts, 30 of them, 20.4 RR for a 0.68 average profit per trade in RR terms. This now summarizes the longs and the shorts added up in total. And you can see the total for July was, don't look at June yet because I haven't finished. I did the longs for June. I haven't done the shorts for June yet. So let's just focus on July and August. So for July, for July and August up until today, there have been 26 trading days, and there have been 4 losers. So 22 out of 26 days are profitable with the market factor as a component. The average profit for July was 0.71 RR for the that's the total. For the longs, the average profit was 725. For the shorts, the average profit was 0.698. And in August so far, we have had 167 trades, average profit 0.4 RR per trade. Longs average 0.31 RR, shorts average 0.55 RR. All right. Now, those rules that I have given you, probably a bit confusing to listen to. I will be updating the lesson with those exact rules, but the basic idea is every morning at the open, you go long or short based on what the trend is. So long or short. However, if there is a gap on the open, you do the opposite. So, and a big gap. So unless it's a trend break. So here we have a gap up, but that was a trend break. We were in a downward trend. Now we switched to an upward trend, so you're a buyer. This day, that's not a significant gap. You're a buyer, but you go short when you cross below. Here, significant gap down in a downward trend, so you're a buyer. No significant gap here, you're a buyer because upward trend. No significant gap here, you're a buyer because it's an upward trend. But on this day, we are in an upward trend. We have a significant gap up, so we are a short seller on the open. This morning, we broke the upward trend, so we were a short seller on the open. We then had a crossover at 11:40. So for 1 hour after 11:40, you look for buy opportunities. And if we go back to today's results and go for the buys starting at 11:40, which is right here, these would all be buy candidates until 12:40. So when I build the spreadsheet tonight, these will all be buy candidates, and I will add them up. Right now, it looks like they're probably a little bit positive, not hugely so. So the basic summary of what I've done is taken what we did before, which was simply going long or short at the open, and added in a market factor, basically not wanting to fight the trend of the market. And it has doubled profitability through that time period, and it has made the number of days that are profitable much higher. If we pull up the old spreadsheet, may as well do that. What time is it? This one. Just wait for this to come up. So for the old spreadsheet, looking at July and August, there have been 25 trading days. I didn't include yesterday. And of the 25, there's only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So less than half have been profitable. So we've gone from, say, 45% profitable to 84% profitable. And that does not even factor in the extra trades that you can do based on chart pattern. So that spreadsheet that I showed you is no consideration of chart pattern, just blindly buying or selling based on the market factor. Not much else affecting the decision. I think that you can still improve the performance even more by taking a little bit of time, if you have it, to look at the chart pattern, and also to take trades later on in the day. You know, this sort of assumes you're only doing the trading in the first 12 minutes of the day unless there is an intraday trend break. If there's an intraday trend break, that's another hour that you would take trades. But I still think that you can look at the chart patterns all day long, and if there's a good pattern, consider taking the trade if you have capital available. So for example, you know, Coles, KSS, came at a time when there was no market factor telling you to buy, but we could take a look at the chart of Coles and see, does it have a good chart pattern at 214? And it wasn't bad. It was breaking to new high, low volatility. So that might be, you know, an extra trade that you would do over and above the, what I'll call the blind trades. So I'm pretty happy with the boost in performance using market factor. I've only accounted for market factor in all of July and August, and I've done the longs for July. I haven't factored in the shorts yet. I'll do that next. But and there's days like, for example, this day when you have a loss on your longs that might get overcome by the shorts because there may have been a trend reversal that day. So that's not accounted for here. That's why there's no data in this yet. So anyway, I'll do that, and I'll do May, and I'll do April, and we'll build up more data and see if it's as good as it was through July and August. But I know for the longs in June, it was a good boost as well. Okay. This spreadsheet is not something I will be circulating. It will be something we use to optimize, and we'll do some optimizations once I have more data. Just wanted to share it with you, let you know what I'm working on. And again, it becomes the basis of the market factor rules that are now in the day trader strategy. And I'm going to do another edit because I didn't factor in some of the little tweaks with the gaps, some things that I noticed yesterday when I was running all this data. So I'm going to add that improvement to the written lesson, and then I will do the video that explains it all. All right, that's a lot of information. Any questions?